Hello. Welcome to the weekend video. I'm going to start this quite upbeat, and as it goes along, I'm probably going to fall into it. There it is. Okay, so this is Enda here. Obviously, this is the weekend video, and just going to run through the markets that I follow, and we'll try and make some sense of it. As always, I'm sure there's people screaming at the screen, telling me I'm an idiot. That may be so, but the pattern is the pattern, eh? Okay. Right, I'm going to start with FX. This is the 4-hour chart in the FX. This is 4-hour chart in Eurodollar. Sorry. I think I can pretty much get rid of this alternate account for them right now because I don't think we're going to see any. I don't think we're going to see an acceleration lower into wave 3 immediately, but we will eventually, but not right now. The current wave count is working out quite well. We've got this nice spike higher this week, this rally this week, which seems to be a third wave, and a third wave of this C wave here. So I've got an A, B, C pattern here going on in Eurodollar, and that'll complete wave 2, and then we should head down in wave 3, and wave 3 should bring us below parity. Again, for the first time in how many years? Who's the first person that's going to be able to tell me how many years since parity? When was that? I don't even have it on the chart here. It was 99, was it, or something? Okay, so let's get into this C wave here and pull it apart. See what we can see what I am looking at. Okay, so a series of 1-2, 1-2 patterns, and then this rally in a third of a third this week. There's a couple of ways, obviously, that you can kind of dismember or pull this move apart. It is interesting that we just halted below the 111.50, 111.48 high, that wave A high there. And we kind of came off the cool jets there on Friday evening or Friday afternoon. I'm counting this as a fourth wave of 5 within wave 3. So 1, 2, 3, 4, 5 within wave 3. And then we should correct and find that 111.50 as support and then push higher up towards. I still favor that kind of 113 level as a target. We'll see how that works out over the next few days because, as I was saying, there is a few ways that you can kind of break down this waveform here. I mean, you could start with a very small kind of 1 running flat 2 pattern here, and then 3, 4, and all this maybe 5. I don't prefer that, obviously, but that's what we're working with. We just kind of have to see how this series of 4th and 5th waves unfold over the next few days, and then most likely by the end of next week, we'll be looking at the completion of 5 waves up in wave C and wave 2, and then I'll be looking down again in wave 3. Okay, let's get into dollar yen, or sorry, cable, pound dollar. See, already my brain is switching off. There's something about talking to a computer screen on your own that makes me tired. Okay, I've kind of almost kind of sort of moved to favor the alternate account here. It would kind of fit with the kind of scenario that's going on in Eurodollar also. So a kind of leg up, a final leg up maybe in Eurodollar, and a final leg up in cable as well. We've got this ongoing triangle pattern that's gone on for years. You can see it here. This is the alternate triangle pattern. So I do have a very definite level that if the price breaks, well, then we'll just switch to this triangle pattern. So we've got a possible A up, B down, and maybe developing a C wave up. We're not quite there yet in terms of like flipping the probabilities in favor of the alternate account. We're just not there yet, but we're almost there. and we're likely to get there pretty soon. Okay, so here is the hourly chart. You could still view this as wave 2, but I don't like that, but it's still possible, and we haven't broken above that initial resistance yet either. So that in itself says that there's still life in the old dog yet. There's still possible that we turn right down into a third wave next week, but I just have to allow for the possibility that the alternate count will take over. And if that's the case, this is an A, B, C, B wave, and then we've got a series of 1, 2, 1, 2, and then we'd rally in a third of a third. Sorry, that should be third of a third of C. Sorry about that. C of C. Okay, so the chances are next week we'll be switching to this short-term bullish count, but that bullish count could bring us up above the 130 level before falling again. Okay, so we'll be watching that initial resistance. Okay, dollar yen, 4-hour chart. The corrective pattern worked out really well this week, and then we got a nice spike. We hit the target and we got a nice spike higher. So at the moment, we're still looking at the possibility of a wave 1 and 2 in place, and now maybe moving higher into a third wave. Okay, so, oh yeah, and by the way, that is a long-term B wave that is in place as well. The triangle, that's a long-term triangle in B wave. The triangle in cable is a longer-term fourth wave triangle. Okay, so let's get into dollar yen, the hourly chart, sorry, in dollar yen. Here's the pattern I was working with throughout the week. So we had 3 waves down in A, 3 waves up in B, and then a nice impulsive move down in wave C. And we hit the previous fourth wave low, which was looking at 107.03. That's what we're pointing out during the week. And then we spiked nicely higher off that. So I'm looking at the developing 5-wave pattern here. So there could be 1, 2, and 3 into Friday's high. Maybe some sort of fourth wave correction underway right now. So that would probably continue in the overnight and then spike higher maybe early Monday. Be nice to see a break above that 108 level. 108 kind of, maybe even 108.20. Kind of push us out above the kind of dominance of that previous first wave. So break out above that previous first wave before correcting. And even if we broke out high enough to allow for us to correct back into the level of wave 1, that would be even better again. But we just have to wait and see on that front. So a possibility of another leg up on Monday. I want to see a break of that 108. Let's call it 108.10. Excuse me. And then we should correct in a second wave before rallying again in, you can see a third of a third. Okay, so stock market, where are we right now? Well, that is the question that I've been asking myself over and over and over and over again for the last 2 months solid. Okay, the initial decline worked out quite well for us. This rally has been a pain in the ass, and I am not going to lie about that. This could be a larger A, B, and C wave completing right now. It's always very possible. I like the fact that we're going for an A, B with an extended C wave, even though I know that the let's call it the relation or the relative size of this correction here does not match well with the relative size of the correction underneath there. But we could still call it a 5-wave pattern, possibly in wave C. I like that we fell on Friday evening, but we just have to wait and see. I need some downside confirmation, even though we did have some nice impulsive moves down over the last or early on in May, but the market has just kind of gasped higher again with this, whatever you might call it, a fear of missing out, I think is the general term. Dive in now before it's too late to dive in. But the problem being is, well, usually when that fear of missing out hits you, it usually is too late. I mean, the fear of the point you should have been diving in at was down here when I was writing about the panic at the low of I was calling all this wave 1 down at that point with wave A, the panic at the low of wave A. That's when you should have been buying, not fear of missing out at the high of wave B. But we are the human creature, and that's the way we work. I have not changed my overall outlook, and you might call that completely foolhardy and stupid, but I don't see any other way of this resolving other than a capitulation to the downside. There is a hole underneath this market right now. There is very much like the highs in February. There is a valuation hole, a leadership hole, a technical hole. There's a chasm opening up, and I cannot see how we resolve. I cannot see how we make it out to a new all-time high. I really can't. Tell me what I'm missing. Anyway, let's get into the short-term action and see what could be going on here. Alrighty, so we had a move down on Thursday, Friday. It's possible that we have 5 waves down, and then we're working on a wave 2. I'm calling that wave 1 in AB. Maybe a flat wave 2 would develop before heading lower again into a wave 3. But I was pointing out some reasonable support levels to watch. So I think if we get a break of this previous 4th waves, that'd be 24,290. If we get a break of that, then that'll confirm wave 3. A break of 24,888, that's the previous high there. That will signal that wave 3 is underway, but the confirmation level is the low of the previous 4th wave. Then you would look for that level to act as resistance in wave 4, any counter rally in wave 4, and then a move down again in wave 5. So critical level for me is 22,785. That's a long way down right now. I know that. If we slice through that in 5 waves, then set up for a recovery in wave 2, and then down we go in wave 3. Okay, there's not a whole lot more I can say about this other than just have to wait and see. Okay. Here is gold. Gold has worked out all right this week. Looking for a 3-wave rally. We got that 3-wave rally. There is kind of a niggling kind of voice in the back of my head that says, you've just bounced off the previous 4th wave. Why aren't you calling that wave 2 of the next leg up? Like, why are you sticking to this 4th wave scenario, this larger 4th wave scenario? Yeah. Sit you down. I'll sit you down and talk about that over a beer sometime. The main reason is to be cautious, I think, right now, because I do think that we have probably hit a height or a reasonable extreme in the short term anyway. We did hit a reasonable extreme in momentum. So sentiment was pretty damn high up there at the highs of 1764. I think it needs a longer kind of cool off period before we rally strongly again. Plus the fact that I keep hearing, and it's a little bit disconcerting to me, to be honest, I keep hearing the notion that gold is the fix-all in every outcome, macro outcome. So, whether we stick to if it's a deflationary kind of recession, depression that comes our way, then gold will be there, and gold should do well. And then if it's an inflationary or, God forbid, hyperinflationary outcome to this whole debacle, which I discount actually, to be honest, then gold does well in that scenario also. I don't like the idea that there is something to own other than your own life, and your faith in God, that there is a fix-all to anything other than those, that one thing, actually, faith in God. Gold is not God, so even though I do like it, and I've liked it forever, and God likes gold too, so that's always a plus. Be on the side of God. That's my mind. Okay, so I am working with this larger three-wave decline for the moment, and it looks like we could have a three waves up in wave B complete. We did fall off that internal wave B high here, so that would be 1740. We fell off that on Friday, and if we start cutting down back below 1710 or 1700 again, that'll indicate that wave C is underway. If the trend channel holds, wave C could be looking down around 1670 again before wave C completes. That's still within the range of the previous fourth wave, so that's a reasonable outcome, I think. And then we'd look higher again in wave 5. Okay, but I think for next week, I'm just going to keep my eye on the development of this fourth wave. Possible one more low to come before we rally again in wave 5. Alrighty, go crude oil. Crude oil had a nice spike on Friday. I still think that this will be a fleeting high. At the moment, we've reached back up into this kind of gap, this large gargantuan gap in the price that happened back in early May. I think it was on 8th or 9th of May, and that would be, again, a target for a correction to reach back up into. Honestly, like I said last week, I didn't think that we would get back up to these levels, but here we are, and I think wave 5 is pretty much primed and ready to go. We're already diverging, pretty serious divergence in momentum. Let's see how the daily chart is going. Top this, wahoo! Look at that for a serious extreme in momentum in MACD, right up to the fourth wave high. So yeah, I think we're there. I think we're ready to go again, back down into wave 5 of C, or say, yeah, it's wave 5 of 5 or wave 5 of C, depending on how you look at it. This high back in 2018 is either a fourth wave or a B wave. So still 5 waves down in either 5 or C. Yeah, I think there's more to come. I'd be too complacent here if I were you, if I were Shell Oil. Although oil will always be worth something, so okay, so no matter what Elon Musk says. This is what I'm working with right now. I was interested, although kind of slightly off-put by this decline early on in the week, noting that it didn't make a new low below the previous low. So there was this kind of niggle in the back of my mind that the possibility of a new high. We traced out what seems to be a triangle, and then we spiked higher out of that triangle. So that was a terminal move. Whether we hit that gap in the price there, you see back up about 36, above 36.60 or not. Well, most likely we probably will, but I would like to see a turn down again next week. Okay. Now, S&P has held up quite well. We're kind of charging towards the 78% retracement level. Will we get there? That's a question and a half. Like I've said in the Dow, the backdrop, or the underlying kind of support structure within this rally is dead. It's dead wood. We are, let's say, structurally deficient here in terms of valuation and in terms of the internal technicals, in terms of the leadership within the rally. I think you can probably. I was listening to Real Vision there during the week, and they were talking about if you. Oh no, it was Albert Edwards. It was on Zero Hedge. Albert Edwards was talking about if you in the S&P, if you took out the fangs out of the S&P, then the retracement in the S&P has been no better than the MSCI World Index. So I think that kind of bounced up somewhere up around 50%. Maybe it's at 38%. Hey, I wonder, do I have MSCI indices? No, I don't. Why would I? No. Okay. So this is a FANG and Microsoft rally. That's all, you know. And so was that. The previous rally was a FANG rally as well. It wasn't a whole lot. The participation within the rally was meager, to say the least. Okay. Now the question is, how does this resolve? And I think I cannot get my mind off wave C down. I can't see how this gets resolved any other way. And I know I'm repeating myself here, but so be it. The forward-looking indicators for both technicals in the stock market, both and earnings, and the economic indicators are just absolutely horrendous. There will be no earnings, in Q3 and Q4, or very slight in Q4. The economy and people's lives have been just battered around the place by this long coming, I suppose, attack on our fake wealth. And isn't it, ironic that it takes a virus to do it, as the rally was a virus also. Okay, where do we go? I think we go down in wave C, but I'm still waiting for a confirmation of that. But like I said, the participation in the rally is very weak, meager, to say the least. You can see the momentum of this rally in the 4-hour chart here. So always look at 4 hours, the 4-hour chart for kind of longer term cyclical changes, let's say. And the momentum here in this rally has the picture of a pretty typical bearish divergence, and in this case a pretty monster bearish divergence, because we've done nothing but diverge lower since early April. So the April highs, we've done nothing but diverge lower in momentum. If you haven't bought in right now, at this point, I don't think there's anyone left to buy in. And the mania has been that rampant across the world, let's say, as the world has flocked to the S&P. And next leg down, oh cometh ye next leg down. The move off the high on Friday was not particularly. It wasn't. It was a three-wave move, so we should probably hit a new high on Monday before turning over. But I still think we've got four waves complete, fifth wave underway, of 5, of C, of B, and it is funny I read also that the most of the gains that have happened in the market over this bear market rally have been in the pre-market, post-market trade, so the after-hours trade, or is that just post-market? You know who's trading in the after hours, don't we? We all know who's trading in the after hours, and that's Joe Sixpack, me. That's us. That's who trades in the after hours, because you don't want to take on, or that they're just, or maybe they're gone to work if they have jobs, or they're still asleep, during the day. That's a very. I found that just a glaring, horrendously bearish signal. Like, if most of the gain of the rally has been in the after hours trading, well then, who is it that's trading and who's buying? And who are these people? These people are the bag holders. They've always been, you know. I'm not talking as an institution here because it's people, it's me, it's people like me, it's people who get swept up by the news or by, you know, mouth breathing politicians or mouth breathing, industry insiders that, tell you to buy, or they're on CNBC and talking their book. Okay, I'm rambling now, but I found that a glaring kind of structural sell signal within the structure of the rally. Okay, next week I'm looking lower again. We'll see whether we get there or not. Okay. Finally, silver. I think we're coming to an end of wave 1 up in silver. We could have another little bounce before that happens. It would be great to see a break of that 1890 level. Whether we get it or not, another thing. But it looks like we have 5 waves up: 1, 2, 3, an extended triangle wave 4, and then 1, 2, 3, 4, 5 in wave 5 of 1. So wave 1 up is pretty much done. So I think we'll probably see some sort of a sell-off in wave 2. If not beginning next week, then most likely the week after. Get into the hourly chart here. I'm looking at. I don't trust what's happened or what happened on Friday there. I think it looks to be at 3 waves up. So this could be some sort of a complex B wave within wave 4. So you see, the alternate here is that wave 4 completed some sort of a failed running flat, maybe, if that is even a possibility, because wave B in a running flat should break out before above the top of the beginning of wave A, but that didn't happen. So yeah, there is a slight chance that this rally on Friday began wave 5 up, but I'm allowing for one more drop in wave C of 4 and then a rally in wave 5. Either way, it would be nice to see a break of that, let's say 19 again before we fall down into wave 2, because wave 2 is probably going to bring us back down towards that 14 or 15 level again. So we've got a previous fourth wave here at, let's call it 1470. So that kind of 1470 level should offer some significant support to a second wave decline. Okay. So next week, decline in wave C, rally in wave to finish 4, and then a rally in wave 5, with the possibility that we break out break out above $19 to complete wave 1. Okay, that does it, I think. Thanks for being with me. Thanks to all you subscribers, you beautiful people. Thanks to everybody who's watching the videos, liking, commenting, sharing, giving out, cursing me, calling me an idiot. God bless you all. And I will see subscribers on Monday evening. And the rest of you, I'll see you next weekend. Okay. Have a great weekend. Be good. There's nothing to do anyway, so you can't be bold.